Hey everyone, Dr. Stock here, Doctor of Education. We're going into the market close, and I just wanted to take a quick look, a little bit of technical analysis for you to say what I think we're going to see in the market tomorrow, combined with consumer sentiment that we have coming out at 10 a.m. So I want to take a look at the SPY. I want to take a look at the Qs. I want to talk about Disney and Tesla in this video, and then also really talking about bear market rally versus bull run. I did have a comment that addressed my last video, said, well, which one is it? So I want to take a look at the indices that we have on here, specifically referring to the S&P and specifically referring to the NASDAQ. And we'll talk about what it takes to see that bear market rally or the bull run. If you'd like access to more of my products and services, check out the link for the Patreon down in the description. Come on over and join the community over there. Get access to my research, my notes, and my commentary. Also, and interact with me in the private Discord that's over there, along with the other community members. We'd absolutely love to have you join that community. It's growing quickly, and I think it's going to grow into just an incredible, wonderful, positive experience for everybody who comes on over there. Like I said, that link is down in the description. With that said, let's get right on to the content. All right, so we'll start off by talking about the SPY. So this tracks the S&P, just in case you're unaware. And so for this one, we are going into the close. It is currently 3:51 as of this recording, so we got less than 9 minutes until market close, and I don't expect any major action to take place here. The S&P right now is just above 4,000. We don't have too much to go until we get to that 4,000 mark, maybe about another 2% to give up before we see that happen. That's if it should end up getting that low. 4,000 could be a really nice area of support for us. Matter of fact, what the heck, let's bring up the S&P itself. There we go. And you can see right now it's sitting at 4087. So 4,000, if I bring my horizontal line, boom, 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 down right about there is that 4,000 mark. And I think that we could find a nice area of support for that should we continue to drop from where we're at right now in the S&P. So we'll have to see should that happen to take place. Now, this little pattern that we have here, the sell-off, and also actually let's go to the SPY to talk about that because then we can see volume as well. There we go. So we can see the tapering off of volume. We still have the RSI that's up above 50, which means that we still have some bullish momentum taking place. And getting to that whole bear market rally versus bull run thing, we have put in, for the first time in a while, a higher low than we had before, and we broke above the previous high. This last high that we have, I think, is going to be really critical for us to really make that determination between a full-on bull run versus the bear market rally. Now, it's not just about the charts and the technos, it's also the economy that's behind it and the corporate earnings that we have. And if we see revenues drop and if we see the corporate earnings drop as a result and we see a slowing of the economy, well, then we're back into bear territory, which has gone as little as 33 days, I believe, and has gone for more than 900 days. 960 maybe the longest one that we've had. So we've been under this for quite a while now. I should have brought up that number, but I didn't bring up that number. But we can zoom out and we can see the sort of sell-off that we've had. And it's possible that we get enough of an economic slowdown that we revisit some of the lows that we've had. So that would signal that this was just another bear market rally versus a full-on bull run. So we'll have to see. And like I said, this peak right back here. And let me zoom in just a little bit so I can get the high on that. So the high was $428 on this last peak. That's something that in the SPY, if we see that broken, I think that makes a really nice area of support for us. We have this golden cross going, so that's a bullish signal. We could watch that keep happening. Consumer sentiment tomorrow at 10 a.m., if that comes out much higher than expected, which is about 65 for the consumer sentiment, if that goes up even higher and takes over previous highs, that goes back into the 70s, which, mind you, is not consensus. Consensus right now is 65, but it's just barely higher. It's 0.1% higher than the 64.9 that we had last month. So we want to watch that for coming out from the University of Michigan, and we also want to watch what they have to say about the year-long inflation, along with the long-run inflation rates, and see if they've also see moderation, if they see that coming down at all, or do they see it coming back up. So if consumer sentiment drops, the market is in trouble. Maybe we retest 4,000 in the S&P, which for here, maybe we drop down that 2% to 400 from where we're at in the close right now, which market has not closed. I don't think that will change much from the 408 that we have right now, which is currently on screen, but that is something that we want to watch out for. It is possible that we retest support. It is possible that we break through support. That said, if we exceed expectations on consumer sentiment, especially if we drastically exceed them, I think that is something that the markets are going to take very positively, especially on top of that, if we see lower inflation expectations come out of that report. Like I said, that's tomorrow. 10 a.m. And I wouldn't be surprised to see the markets hesitate up until that point. So we're going to have to watch that as that comes along. I think it's going to be good for markets. I think it's going to allow us to at least hold steady, if not move us up a little bit. Maybe we close the week in green, which is something that I said last week when I started talking about consumer sentiment. So let me bring up the cues. And so when we look at the NASDAQ that we have here, yes, we broke the previous high, which is a good thing. And it looks like we actually dropped through this little support line that I have here. Maybe not totally. So maybe down there you could argue is also still support right around that $300 level. That's a nice round number. We could have a psychological support taking place with that. And this high, I don't think is the important one. I think the really important one, the one that would really be a lot more confirmatory, is the one back here at 333. So breaking above that 330-ish level, I think is going to be key for going from bear market rally to maybe more confirmatory for bull run. But like I said, it is not all in the charts. So we have to watch the health of the economy play out. We have to watch the health of the companies as they report further earnings, and especially as they get into Q1 earnings. Those Q1 earnings, seeing how the companies have survived Q1 and also their guidance moving in throughout the rest of 2023, that's going to be huge for determining this. So just because we rally for a little bit longer doesn't mean that the end of March, getting into April for that next round of earnings, isn't going to be scary for us. Plus, we have that summary of economic projections to watch out for. So I did move this support line a little bit down. Now, you do have support lines, but it does help sometimes to think about areas of support. So you would have more like you could think about like a cushion. You might break through some support lines, but there might be other support lines nearby that would also help that. You also have areas of resistance, and you also have resistance lines. So that's something to differentiate and something to watch. And we'll see if we break significantly out of that. I did have this. I'd have to go back. I think I had it up there, which is, I can't see, it's close to 301 where that's at. And if we move it down here, it's close to that 300. So it's not much of a price difference when we look at that. I did say that I want to look at Disney. I'm purposely holding off Tesla till last because that one's kind of exciting to look at. So Disney is coming back down to about where they were at before. So they have about another 2% to give up, and maybe they will. Let me see. We have 3 minutes until the market close as of the recording of this video. Perhaps they give that up, holding steady at 108. Disney, if the market does show some weakness, I think it's possible we come back. Not only do we have support coming from these candles here, but we also have the 200-day simple moving average to also land on for support, and that psychological support of $100. So if we reach that area of support and we don't have significant downturn in the markets, that could be a really good opportunity for people who are interested in Disney stock. So we'll see. Disney is they're an incredible company, a very strong company, and I would say that there's a lot less risk for me when I consider buying Disney. I don't currently hold it, but it is one that, seeing those prices come down, starts to make me think that maybe it's getting to be time to buy into Disney. I did not do it when it was 84, but I was very close to pulling the trigger on it, and that was right about the time that it started ripping back up. And I wanted, that was the thing about trying to time the market rather than trying to take little pieces of it through dollar cost averaging. I went to take a position, and then I was like, I'll hold off until it comes back down. And then we had a pretty significant run from there. So up from 84 up to, what was the high price here? The high price here was at 118. So $34 up from there. So that's an incredible amount, more than what it was. That's between 35 and 40% up from those lows. So great run, Disney. And I'm sorry that you kind of sold off throughout the day from after reporting your earnings. But just because the stock is moving like this on a day that the markets are down, we see a little bit of that softness. So tomorrow, if it goes green through consumer sentiment, maybe we sit on the support a little bit longer. Maybe we lift off of it a little bit. If we do happen to pop up from that up to 113, we have about 3% up. So depending on how you look at that risk to reward from where we find our support, maybe at about 108, which is $2 down, about 2% down versus about 3% up for people who are interested in trading things like Disney and also paying attention to the market bias that we have behind it. That could be something that would allow you to find an opportunity there for trading. Let's move into Tesla, because this, like I said, it's a fun one. Tesla, I was actually surprised to see them break 200. I didn't know if they had the momentum left to break 200. So when you look at our RSI, we're up at 77. So I'm not surprised to see this candle pop up like it is right now, that we have that shooting star-ish kind of candle with a lot of that downward pressure, that we peaked at about $214. So I don't say this because I'm bearish on Tesla. I'm very bullish on Tesla. If you watch the live stream that I had with Stock Moe, I'll put the link to that down in the description so you can go back and watch that if you haven't. Tesla is one of my favorite growth stocks. And I know that it sounds very cliche, but looking at their numbers, going through their earnings, looking at the margins they produce, looking at the industry that they're in, and not only is it automotive, but all the AI that they have backing it. Like there's all this talk about Microsoft and Google, Tesla for when it comes to EVs and full self-driving. They're the kings by far with AI in that field. So if we're really bullish on AI, then how are you not bullish on Tesla? So for me, I'm a computer nerd, and as a matter of fact, the nerd emoji, if you've been watching the live streams, you'll know that that's my emoji. And if you like these videos and you think I'm very nerdy about this stuff, go ahead and put that nerd emoji down in the comments if you would, please. Also, while we're taking that quick break, hit the like button, hit the subscribe button, and when you're finished watching this video, or if you want to do it right now, click on that link for the Patreon and come on over and join my community. I'd absolutely love to have you over there. Remember that if you'd like to hear more of what I have to offer, see more of my products and services, and participate within my community in the private Discord and talk with me over there, I'd absolutely love to have you over in the Patreon. That link is down in the description. So back to Tesla, when we look at this and we see that candle come up with the RSI as high as it is, and I know I've talked about the Bollinger Bands before, this is not 2 standard deviations above the 20-day simple moving average that we have. This is well within it. So when we look at that, that doesn't tell us that we are at an unusually high price. I think it's been sort of smooth. It's been a really nice, consistent run up for Tesla over this time. I think that it is time for the bull on this Tesla to rest just for a little bit. So like I said, I'm not bearish on Tesla, but I do think short term, we do come back and we retest support at 200. We did break cleanly above 200. That can act as support for us, and it can be very good support for us. If we get significant downturn in the markets from the reports, for example, CPI coming out, if that comes out at or above expectation on Tuesday, February 14th, happy Valentine's Day, by the way. Show some love and hit me up down in the comments with that nerd emoji. Remember, I'm not giving up on this. So moving on from there, we could come back to these other support levels that we see, 178, 167, 151. And that 151 actually lands us for right now around that 50-day simple moving average, which again can act as significant support for us and can also offer significant opportunities for people who want those positions. So when you look at this stuff and you're like, in the short term, there are such things as buying put options that, you got to be careful with that kind of stuff, because when you buy options, time is working against you for those options. And if you're going to trade those options away, well, that price movement has to happen in a reasonable amount of time, because like I said, it's a lottery ticket kind of play if you're not planning to exercise your option to either buy or sell the underlying stock, depending on the direction that you take. So just a quick example, if you expect Tesla to go down the next day based on what you see here and the run up that you see in the prices, you could buy that put option. Tesla would come down in price, and potentially you would be up money on that contract. And it's not quite as simple as that. You always want to look at the option deltas that are out there, and also take a look at the volatility, because that can affect the prices. There's liquidity to pay attention to, because what good is a contract that you can't offload or exercise? But that's another video for another time. We can talk that kind of stuff over in the Discord if you want to come over. Links down in the description for the Patreon. So let me wrap this up here. So the market's still an interesting time. I stand by what I say in my previous videos that the S&P, we're near that 4,000 mark. Do we push lower from there? Tuesday, we could possibly do it. The Qs, we're sitting near support for that as well. And again, it's consumer sentiment for either one of those things. Tomorrow, I think we end the market green. That's still my call. We end the market green tomorrow. I'm putting my name on it. Again, doesn't mean I'm right. I do have a crystal ball. It's just broken. Moving on from there, about the bull run versus bear market rally. I don't think that we have enough evidence yet to say bull run, game on. And I don't think that we're going to get that evidence anytime soon. For right now, we enjoy the rally that we're seeing, and we continue to watch the indicators as they come out, and we watch the charts. We want to watch those lows stay higher. We want to watch the highs go higher. The more that we have that, the more confirmatory evidence we have in the market, at least, that we're furthering into that bull run. However, we need to have that weather vane going and watch what direction the winds are pointing, or watch what directions the winds are pointing it, so that way we know, should we start to take a downturn, should we start to head back down, especially swiftly, towards revisiting the lows at any point in time during 2023. We want to be ready for that with our trades, and we want to make sure that we plan accordingly. So what does it take to see the next bull run? We need corporate earnings to be strong. We need the revenues to be up. We need the federal funds rate to come down. And we also need inflation to also come down as well. When those things happen together, we have the most significant chance for that bull run to be happening. And the market is going to price it in ahead of time. So we need to be watching for when we believe that is going to take place. If it's sometime within 2023, well, we definitely want to plan for that accordingly months ahead of time. We want to know that. The things that I think are going to really dictate the course of where the market goes over the next month: CPI, Fed minutes, PCE, consumer sentiment. And I know it's a little bit outside a month, but that summary of economic projections that we get in March, and not long after that March meeting, less than 2 weeks after that March meeting, is the close of Q1. And then the market starts to get really nervous about the earnings calls as they happen as we go into April. How nervous they get, I think, depends on those economic reports that we see come out. And please pay attention to geopolitical tensions. That's also something that can affect the markets and other macroeconomic events, what's happening around the world with other economies as well. So that's the research that I'm looking at. That's the stuff that I'm looking at, because that is going to affect all of the stock market. So that's all of the growth stocks. That's all of the dividend stocks that we have. Like, they all move based on what we see in the markets, what's behind the markets, what's causing the markets to react, and the narrative that we have, and the story that's being told, and the story that we believe. So knowing the details of that story makes it better to interpret and look ahead. So last thing, and I swear this is the last thing, there's two main branches to statistics. One is descriptive statistics, and that's your data analysis part, where you see what has happened. And then from there is where you start to look forward and inference what's going to happen next based off what you've seen. So if you haven't done the work to have a description, a well-rounded description, I'm not going to say a full description because there's no such thing, but a well-rounded description to understand as much as possible about what's going on, to know as much of the story as possible, then it makes it easier to look forward with a little bit more clarity. And then you can make decisions with a lot more conviction. So I'll get off my soapbox for that one for right now. I know that I've taken up a decent amount of your time, and I really appreciate you being here. Once again, if you haven't watched my live stream with Stock Moe, he's an incredible guy, really, really knows his stuff inside and out about economics and fundamental analysis. Watch that live stream. If you haven't subscribed to Stock Moe, subscribe to Stock Moe. Trust me, you just won't be sorry. Down in the description, I also have my link for my Patreon. Check out my products and services. Come join my private Discord. Let's build out that community and really turn it into just a place that's awesome for sharing ideas and information and moving forward towards financial freedom. Again, link for the Patreon down in the description. Thank you guys so much for watching this video. I really appreciate it. I'm Dr. Stock, Doctor of Education. I'll see you in the next video.